Let me welcome our moderator, Mahlet Makonnen, principal from Williams & Jensen, who will be joined by James Mitchell, general partner of Mitchell Partners, Matt Taback, senior market maker, GTS, and Dan Zinn, general counsel and corporate secretary of OTC Markets. Now that panel took a little bit of extra time. That's okay, because you will have your full 40 minutes and we will just cut some time from lunch. That's not a problem. So welcome, guys, and Mahlet, please.
Thank you.
Thanks.
Thank you. We'll take it. What an interesting panel. PFOF, obviously such a hot topic, but we will show you how Rule 15c-2 is also something that you should be following. Good morning. As Kim introduced me, my name is Mahlet Makonnen. I'm a principal at Williams & Jensen, and today we'll be talking about amendments to Rule 15c-2, which governs the publication of quotations in the over-the-counter OTC markets. I am joined today by Daniel Zinn, who's the general counsel of OTC Markets Group. We also have James Mitchell, general partner at Mitchell Partners, and Matthew Taback, senior market maker at GTS. Thank you all for being here today. Before we begin, if anyone has any questions for our panelists, please feel free to drop your questions in the chat and we will try to get to it if time allows. So let's start with the looming compliance deadline for the rule, which determines what issuers are going to have to do in order to maintain their public quote on a public market. And Dan, it feels like deja vu, as me and you have been discussing this, the changes last year during the annual conference, now that the rule is final and will be in effect in 2 weeks. Can you just give us a little bit of overview of what the significant changes are, including, of course, what the OTC Markets Group is doing? I know you've been quite busy the past couple of months, so.
Sure, no, thank you for that. I hope we didn't overpromise with trying to make it as exciting as the prior panel. Let's see what we can do. So right, I think the most important thing for people to recognize, to the extent you're following 211, is that the compliance date is 2 weeks from today, September 28th. So that's the day when everything will change for the outside world. To Mahlet's point, we've been working on this for quite some time and talking about it for even longer. A couple of big things, I think, to maybe start the conversation and things that we need to focus on as to what people will see on the compliance date. But what the SEC was doing or is doing with these amendments to 15c-2 is trying to ensure that, at least for retail investors, there is current information available in securities where the retail investor has access to quotes and can kind of engage with ongoing inside bids and offers. And so there's two big changes that the rule brings in to help accomplish that. One, and what you will see on September 28th, is that companies that are not making current information available will, for the most part, there are some exceptions, but for the most part, will no longer be publicly quoted, publicly visible, or at least the subject of public broker-dealer proprietary quotes. That is a universe. If you were to look at our market now and look at the pink no information companies, that's more or less the way to think about how many companies are going to be impacted here. There are a number of those companies that are in the process of trying to get their information current or otherwise qualifying for an exception. But it's going to be a significant number, think somewhere in the 1,500 to 2,000 company range, that are no longer able to be quoted by market makers. What will happen after September 28th, that's the other big change, is that for companies to come on to a market like ours, to begin to be quoted, instead of having to go through the broker-dealer Form 211 process, where a broker files a form with FINRA indicating that information is available, we, OTC Markets, as what's known as a qualified interdealer quotation system under the rule, will be able to do that kind of review. And once we have determined that a company meets the 15c-2 standard, we can open up quoting for all of the broker-dealers that subscribe to our system. So instead of just the one broker that filed the form, which is the way the rule has traditionally worked, it will open it up for things like price discovery and just a depth of market a lot faster. Those are the two big things to look for on the 28th. The other thing I think I want everyone to be aware of is that as you see these changes take place and as you see pink note information go away as a category on our market, and a lot of those companies no longer be the subject of a quote, you're also going to see some companies that are currently what we call gray market that don't have a quote qualify for exceptions to the rule. Particularly, there's a large issuer exception that focuses largely on average daily trading volume that will then be raised up to the pink market, and those companies will be available to be quoted by market makers. So it's a lot of activity, it's a lot of back and forth, and the complexion of the market's going to look a lot different on the 28th. I can get into it in more depth, but I think hearing from Jim and Matt as well about how they're going to experience it and how they're planning is going to be useful too.
Exactly. And I mean, we can start with the first big change. And Matt, I will, ask you from a broker dealer's perspective, now that the rule requires that companies provide current information to be publicly quoted. Of course, there are some limited exceptions to that. How will the existing market operate, including, of course, a broker's ability to initiate quotes once the changes are fully implemented on the 28th?
Right. So, as Dan alluded to, in some ways, for some issuers, this will be great. There are a lot of warrants and preferred stocks of companies who trade on national securities exchanges that, the markets are a little bit inefficient because, they weren't, there wasn't a piggyback exemption for them before. And now with this new rule, we'll see a lot of those, bona fide issuers will all of a sudden be eligible for quotation by all the market makers, and I think that will be good for a lot of those issues. Where we have to see how the market is going to form for the issuers that that get dropped off the lit market, so to speak, and there's a lot of restrictions that many brokerage firms are putting in place in terms of not allowing investors to buy these securities anymore. And so we for sure, we're going to see some market inefficiencies form. And, I think it'll take a little bit of time for those to kind of come back in line, because I'm sure as Jim will get into, there are quite a number of issuers who are kind of getting caught up in this rule that are absolutely bona fide issuers, but for one reason or another, don't meet the information requirements of the rule. And the problem that I'm most interested in seeing solved is how we sort of save those issuers. And maybe down the line we we get some new exemptions for certain issuers, or obviously the issuer can make disclosures, and that's one way to solve it. But there are plenty of issuers who don't want to, and it's kind of this first couple of months will be a bit of a wait and see.
Right. It'll be a little bit of a trial run. I'm sure there may be changes to come. And, it's one thing that you noted, Matt, is that how issuers, that the gaps when it comes to issuers, and that one of the key investor protection objectives of the amendment to the rule was to ensure that companies provide this current disclosure to investors in order to maintain a public market. But like you said, there's still some development that's needed. Some feel. And Jim, from an investor perspective, do you believe the final rule accomplishes this objective, or are there any outstanding issues that you believe are problematic when it comes to shareholders of legitimate issuers that choose ultimately not to comply with the rule for one reason or another? Jim, you're on mute. There you go.
Thank you.
Welcome.
In my opinion, it's kind of a mixed bag. The OTC companies that have been traditionally trading in that market, they tend to be smaller companies, but the larger ones, for the most part, are complying. Among the smaller companies, many of them, we've yet to hear what they plan to do. Quite a few of them are deciding not to comply, partly because of the cost, but also partly because many of their shareholders hold physical certificates, and they don't see that many trades per year in the than through traditional securities transactions. So, for example, with the CEO of a Louisiana company that I talked to a couple of weeks ago, they looked back and they only had 4 trades in the prior year that were handled by brokers, and they decided that it wasn't in the best interests of the company to comply, even though they've been trading over the counter for decades and don't really present any problem to as far as the SEC is concerned.
Right. So let's talk about those companies. So what happens to the market, right? Those that no longer are listed on the public market. Can you all, of course, and Danny can go as well, talk about what's going to happen? Obviously, we'll touch base on if they want to be listed and they cease to provide that certain information, current information. There's a process for that, and Dan, you can go into it a little bit later. But let's talk about what happens to those that choose not to comply.
I mean, from a market maker perspective, I'll just say, just to be clear, these companies will still be tradable. Their shares will still be tradable. You just won't be able to pull up a bid and offer. We'll have to go back to doing things the way we did them 2 decades ago, which is calling people on the phone to try and find buyers and sellers. And that will be calling other market makers, and also calling investors like Jim, who traffic in some of these names. And so it will slow the market down a bit. But to Jim's point, some of these smaller issues that don't trade that much, it's not, you still kind of, you'll take a little work to find where the buyers and sellers are, but it won't stop the trading 100%. We'll just make it more difficult.
I think that's a really key point, particularly in light of what Matt was saying earlier around some of the policies we've seen come out of retail brokers and others, to make that, and then maybe from the regulatory standpoint, I'll put it, this rule, for all of the work that goes into it and all the changes that are going to flow from it, this rule only governs whether a broker can publish a proprietary quote in the security. And it will impact all of those changes, but it does not impact whether somebody can hold it, whether it can be traded, who can communicate with whom. It's only whether a public quote can be made available. So it will certainly set up some roadblocks. To Matt's point, you'll have that kind of broker to broker communication or broker to investor communication. There is an exception for unsolicited quoting. So which has its own caveats, but for an investor who's not affiliated with the company, who actively calls their broker or actively submits an order, that would be able to be represented. I think Matt would tell you that doesn't necessarily make the trading process easier all the time. It doesn't necessarily provide you with the kind of pricing information that you're looking for. But some of these things will continue to perpetuate after the 28th and will allow for some degree of activity.
That's important clarification, I think, for the operation. Obviously, Dan, you're experiencing a lot of applications, I'm sure, those that are trying to comply before the 28th deadline. And that's something that not everyone, even though they've started the process, they may not be able to meet that September 28th deadline, right? So I think companies have questions about, okay, we don't meet the deadline. Now we're no longer listed. So what is the process? You just continue the application, and then alternatively, you are listed, you're quoted publicly, but that if a company at a certain point ceases to have current information, what will the process look like for that company to become current again?
Sure. These are really important questions, and we're putting out some public information on this, and we're going to continue to do so. So the first question, or the first part of that, is what's happening with companies now in the 2 weeks leading up to the 28th. You are right. We have been, and to the SEC's credit to some degree, right? Part of their goal with this rule was to incentivize companies that weren't making current information to go ahead and get current and put information out there. So to some degree, that's working. There are companies that have applied to use our service to be able to put their disclosure out there, meet the requirements of the rule. We had put out an initial date of June 30th, indicating that everyone needed to get their application in by June 30th to ensure that we were going to be able to have time to go through that application, and then also give the company time to post the required disclosure and give us a chance to just review and make sure that all the required components were there. We're going through that process. There have been a number of applications subsequent to June 30th as well. We're going to do as many as we can right up until the night of the 27th, which is why we're not going to know those final numbers until the 28th. But we're working through it. We have a team in DC that's doing a fantastic job turning that over as quickly as they can. But to your other point, there are going to be some companies that either have chosen not to do it and then maybe change their mind later, or that don't get their information in on time, or for whatever reason, are not able to remain on the lit market on the 28th. Those companies then have to go through what we're calling an initial information review. So they really have two paths, and this is partly what I was referring to earlier. The company could make its information current. That could be an SEC reporting company that reports through Edgar. That could be an international company that reports on a foreign exchange and makes that information available in English. That could be somebody who publishes their disclosure through us. It would go through a review process that we can do. It requires some red flag checks and looking at some other components akin to the disclosure. And once they've gone through that, we would then open up trading. We would make a publicly available indication that the company has met those initial standards, and then any broker could come in and quote. The other path for a company like that is to have a more traditional broker filing a Form 211 with FINRA, have FINRA do that review, and then commence quoting on our market. That will work for the initial standard, but the company will ultimately need to make their information current on a regular basis once quoting has commenced. For example, the rule would allow for financials that are not audited to go through that initial information review, but that's not something we are going to do. So for a company, for example, that doesn't have audited financials, they would need to go through that process with FINRA. And then once they had that initial approval, start making their information available. It doesn't have to be audited at that point, so that they can maintain that current information requirement. It's a lot to bite off. I'll pause there. There's more we can get into, but.
And I believe you have resources also available for those that are going through the process, and so that's something that they can look at. And there's a lot in the rule. There's a lot to process. And actually, one thing I do want to take it back and talk about what's not included in the rule, right? I think you will all have an opinion about this, which is the expert market exception. Although the SEC previously indicated that it was open to considering an expert market exception to the rule for compliance purposes, but decided not to go forward with that carve out. And so what does this mean for the future of an expert market exemption, and maybe touch upon some of the other allowable exceptions and others that are needed following this rule? Obviously it's final, but I'm sure you all have opinions about it still.
Jim has been such an advocate and just good about discussing the expert market. Maybe Jim, you want to kick that off?
Now, we definitely had hopes that the expert market would be approved. It is my understanding, and Dan may be able to comment on that there will still be an expert market that can be viewed by broker dealers, where individual shareholders want to put up a an unsolicited bid or offer, and they aren't affiliated with the company in any way.
That's right. So the expert market that we had been working on with the SEC and that we were hoping for was really a carve out, as Mahlet put it, for brokers to continue publishing proprietary quotes in securities that otherwise didn't qualify with the lit quote under the rule and with limited market data distribution. So to give effect to the SEC's concern about retail investor access to those kinds of quotes, the distribution of quotes in that expert market was to be limited to, was going to be called qualified experts, but roughly broker dealers, some institutions, and accredited investors. Once the SEC determined that they weren't going to go forward with that, at least in the short term, we shifted focus. We are still going to have an expert market, to your point, and that's really going to be a category that encompasses any company that doesn't otherwise meet the standard for quoting on the lit market. But instead of allowing brokers to put proprietary quotes there, because we're not able to do that, it will only be for unsolicited quotes that meet the exception in the rule, which I think you alluded to means unsolicited quotes from those that are not insiders or affiliates of the company. And so it will be a significantly more limited quotation pool, but to the extent quotes exist, they will be there. There'll be expert market quotes, and we will distribute them to broker dealers so that there is at least some degree of price discovery or understanding of who else has quotes or who else is representing customers that have quotes in that market. That's the go forward plan. One of the big pieces of the idea of the expert market was to have it in place prior to the 28th. It was really set up to catch a lot of those companies that are otherwise going to fall on the 28th. Should the SEC reverse course at some point and determine to open up the expert market, it's still a viable idea. It would still catch whatever companies lose their exemption or lose their compliance with the rule going forward. But it would not, at least the way we had conceived of it initially, it would not just bring back those companies that had otherwise dropped from the lit market. So it would need to either be tweaked or it would just be a much smaller version of what was originally intended.
Right. It would not, the companies that will drop off after the 28th, not all of them will necessarily want to, obviously, as we discussed, come back on. And so that expert market exception would have been helpful, but hopefully in the future, it will be included. And I want to go back to what Matt said earlier about potential exemptions that the SEC could provide to clarify and strengthen this rule. And Matt, if you can just walk us through some of the things that you foresee or you would imagine that the SEC would do to clarify this rule.
Yeah, I mean, I would like to see the same way the current 15c-2 filing process is standardized. I would like to see a process develop where broker dealers or investors could apply for an exemption, not just the exemptions that are carved out in the rule, but when the SEC was formulating this rule, they indicated that they were open to discussing whether or not to allow certain issuers to be exempt from this rule, and they even asked the broker dealer community, please reach out to us. I'm not sure. Not sure if there was much outreach one way or another, but I think over time we would all benefit, especially investors, from having some sort of process there. I'm concerned about there are certain companies that will just not be able to meet the requirements of this rule, because they need to restate financials going back 2, 3, 5 years maybe. Companies working their way through bankruptcy where there may or may not be value for shareholders. I mean, it would be a shame. The goal of this rule isn't to prevent securities like that, I think, from having liquid markets that are accessible to all investors who want to buy or sell. And so I just hope that as time goes on, sooner rather than later, that we're able to get to that point. And I think the regulators are open to that sort of discussion, and I guess we'll just, again, we'll have to see how things unfold.
Right.
Sorry.
Go on.
Coach off, but just to all of those points, we had the similar feeling that Matt expressed about the SEC and the regulators' openness to talking about those kinds of things. And I think there are a number of examples. Matt gave some good ones. And we talked about that things like banks, right? A group of companies that has its own regulatory regime outside of 15c-2 or SEC mandated disclosure, or larger international companies as those, exactly to Matt's point, that were not really the intent of the rule, at least as we saw it, and that could be the subject of some sort of exemption other than just about whether they put the appropriate information there. And there was an appetite for some time for that discussion, just like there was with the expert market. But all of those things sort of ceded or faded away when the expert market idea was put off a little bit by the SEC. And so those sorts of things would continue to have, I think, a larger degree of usefulness, even if they were instituted after the 28th, where maybe some additional data or some other information that we can share with the SEC would help expand the pool of companies that are otherwise able to continue to trade without going through or without stumbling on some of the regulations that are not really intended to curb conduct in their.
Right. I mean, the rule is final, but doesn't mean that there would not be guidance following a final rule like this. And a lot of comments and discussions have been had during the process. And I think that the SEC, I believe, is mindful of that. And hopefully there will be some adjustments. So I want to go back to, I know, Dan, you gave an brief overview of the changes in the beginning. And one thing is that what OTC markets does is not necessarily exactly mirroring the rule. And I think that's important to highlight some of the things that the rule points to, but obviously you have different processes or timelines.
Yeah, I can explain it. And then I'm actually curious for Jim's take on these areas where we do differ from the rule. But it's a very good point, right? At the moment, we're going to be the primary market that is going through these processes and determining whether companies qualify. And so the way that we do things is going to be, I think, what happens to all companies in the market. And then going forward, we'll see how that develops. So I think one good example of what you're talking about is with respect to where current information is published. Under the rule itself, if a company is making information available, let's say on its own website, that would qualify as making current information available. Our view is that once we indicate from a compliance perspective that a company is in compliance with the rule, we are putting ourselves out there. We are taking responsibility for that determination. And we don't have, it's not possible to go and look at every issuer's website and determine that the information is always there, that there's never a paywall or other firewall, that it doesn't get changed. So in the same way that the SEC doesn't let you post your 10K on your website, post the Edgar in the central location, we require the same thing. So that qualifies you for being current can be through a regulator, can be the things I mentioned earlier on Edgar or through your international exchange, or can be published through our system so that we understand it's in a central location and we know it's always available. Other examples, I think, are what we touched on earlier with respect to the initial information review, where things like unaudited financials would otherwise qualify you, but we are not going to make take that step in doing initial information reviews, at least not initially. So we're going to have some requirements. You will see in the coming days, potentially even later today, some initial information review guidelines for companies on the pink market that need to understand what they would have to do in order to qualify. And then our OTCQX and OTCQB rules are active, and companies that are in compliance with the standards there will meet the 15c-2 compliance standards.
Right. And like you said, I would like to also hear Jim's take on, how you've been preparing and any advice that you have for in the investor world.
Well, we've been somewhat proactive in that we wrote letters to all of the companies themselves, the issuers, in at least 100 companies, urging them to get acquainted with the rule and to comply with the rule. And that's the basis of my being able to say that most of the larger companies that we know about trading over the counter are going to comply. But there are, among the companies that have decided not to comply, there are some issues that I hope the SEC may come back to. A lot of these companies don't realize that a 10% holder is presumed to be an insider, and there's no path like there is with listed stocks. If you're a 10% over a 10% holder, there's no simple path to get back down below 10%. So we're hoping that further attention will be given to this. Also, I think some of these non-compliant companies, there's going to be an educational process. They may not realize that their officers and directors can't trade, and we're presuming that applies to the company itself trying to buy in its own shares, that it will have to, it won't be able to use an unsolicited offer in the continuing expert market.
And that's, I think there's going to be a lot of educational efforts as they're well after the September 28th deadline. I know a lot of companies are preparing now. I'm sure they appreciate the advice and will continue to ask for some more advice and guidance from the SEC. And I know that we're coming up on time here, so I want to see any parting words from all of you about how the market will be functioning moving forward. And again, I know, Jim, you gave some sound advice about things that companies should keep an eye out for as they're not in compliance. So I'll start with you, Dan.
Sure. I think one of the points I wanted to make to all of your comments around questions is we have what we're calling a 15c-2 resource center on our website on otcmarkets.com, which has a number of FAQs to help answer these questions. We are also obviously talking to companies, investors, brokers, really any interested party as much as we can about what to expect. It has been a long time coming, right? We've been preparing for September 28th for quite some time. We feel good about taking on the responsibility as the entity that's going to review and determine whether companies have put out the appropriate type of information. We believe that our broker-dealer partners, Matt and others, are going to be prepared to work with whatever changes appear on September 28th and subsequent to that. And so we're at this point looking forward to seeing it get implemented and seeing these things start to take shape. And to the extent there are questions, not only from the folks who call in now, but anybody who's listening to this or watching, please reach out to us. We want to be a resource. We want this to be as smooth a transition.
Right. And we actually have a question for you, Dan, and from a participant that states that the SEC proposed this rule over a year ago, but they approved it in its current form somewhere recently and have stuck with the September 28th deadline. The question is, Have you ever seen this short of a time frame for broker dealers to adopt this new rule change in a marketplace? And do you think the SEC would entertain extending this September 28th deadline?
I think the last part of that question is probably the most relevant, and I can't speak for the SEC certainly, but probably not. I don't expect that deadline to be pushed out. To be clear about how this has worked, the original rule was, or the amendments to the rule were proposed roughly 2 years ago, finalized about a year ago, and then have since been being rolled in, and we've been developing all the procedures there too. So while the impact and I think some of the steps that have to be undertaken have become apparent more recently, from the SEC standpoint, they have actually given quite some time rule implementation, which I just think speaks further to the unlikely event that they would push this.
Anything can happen.
Anything can happen. You never know.
Matt, Jim, any parting words?
Sure. I'll just speak for the entire industry and say thank you to OTC Markets, Dan, especially you. You guys have been absolutely wonderful stewards, kind of guiding us through this whole process over the last couple of years. So thank you for that. And my final words. As market makers, ultimately our only job at its essence is to help buyers and sellers find each other. And whether it's the most liquid stock in the world or the most illiquid, we'll be there to help.
Thank you.
For that, Matt.
My only comment is that I hope some of the larger brokerage firms will open up to be more willing to accept unsolicited offers or in some of these stocks, whether or not they comply.
That's true. Well, this has been very educational, I'm sure, for participants out there. And certainly, as Dan said, there will be resources available for you. And if the SEC considers reopening or providing exception in the future, of course, provide comments as that will be helpful for them. And with that, Dan, Matt, Jim, thank you so much. It's good to see you. And Kim, thank you for putting this together.
Thank you, guys. Thank you, Mahlet, Jim, Matt, and Dan. We really appreciate your participation and support. It was very informative. I hope if you guys want an extension, there is one, but as Dan said, it's highly unlikely and time is ticking. It's only 14 days away. So good luck with the reforms and implementation. Thank you all.